Hello friends, welcome to my trading channel. In this video, I am going to explain how to trade futures. Okay, I will take one example and make things clear. Say I want to, generally when you buy any stock, okay, say if you want to buy SBI, okay, SBI current price is 600. Say if you want to buy 100, okay, you want to buy 100 stocks, then how much you need to have in your account, right? 60K you should have in your account. Then if it increases say 10 rupees, then you will close, right, with a 600 profit, 600 rupees profit. Okay, you are very good in stock market, you are very good in stock market and you want to buy 1000. You analyzed the charts like using candles or moving averages or using some technical analysis or fundamental analysis. You got to know that SBI is going to increase, let's say 20 or 30 rupees, and you want to buy 1000 shares. Okay, how much you need? You need 6 lakhs. Okay, but you don't have that much money. Okay, you don't have 6 lakhs in your account, but you are pretty sure that, okay, it will increase 20 rupees today. Okay, then you might get 20K profit, isn't it? But to take this position, you need to have 6 lakhs in your account. But you are not that rich, right? You might be doing a job where you get a 50K salary, but it is very difficult to get, even though you are having good knowledge on the stock market. Okay, you can't take this position, right? Okay, say you have some savings like 2 lakhs, okay, in your demat account, still you can't buy this, right? You can't take this position because 6 lakhs, you don't have 6 lakhs, but you are pretty sure that it increases 20 rupees. That means you don't have the money and you are missing the opportunity. So using futures, okay, in futures you don't, you can't buy one single stock. In futures this problem will be solved with the help of futures. Means, okay, I will, in futures always there is something called lot size, so you can buy 1500 quantity. Okay, 1500 into 600. Okay, there is something called lot size. For SBI it is 1500 quantity. Okay, suppose assume if it is not futures, if you want to buy 1500 SBI, how much you need to pay? Check, 9 lakhs you should have in. Forget about 9 lakhs. I don't have money to buy even 1000 quantity, and how can I buy this much quantity? 1500 quantity, for this I need 9 lakhs. But what futures, the advantage of futures is you don't need to pay this much amount. Say out of 9 lakhs, if you have say 10% or 12%, okay, for our example just I will take 10%. That means if you have 90,000 in your account, you can enter this future contract. Okay, that means what happens in your demat account, if you have 90,000, even though it requires 9 lakhs to buy 1,1500 quantity, in futures you don't need to have 9 lakhs. If you have 90K in your account, you can take the position. Now see what happens. Suppose you entered a future. How to buy this I will show you. Okay, if you want to buy SBI futures, sorry, SBI November future. See SBIN, you select this, add this to your watch list and see. When you click on buy, for 1500 into 600, it is almost 9 lakhs. But see, if you have 1,81,000, 1,81,000 in your account, they will allow you to take position. It is just like you are buying 1500 quantity. But why do they allow? Because I will show you what happens. Okay, if you have 1,18,000, ideally you should have 9 lakhs in your account. But if you buy futures contract, it is same like you bought 1500 quantity. There is no difference. Okay, 1500. But if you have 1,81,000 in your account, you don't need to have 9 lakhs in your account. If you have this much amount, you can enter this futures SBI futures contract. Okay, assume the various scenarios. Right now, assume SBI is at 600. Suppose it increased from 600 to 620 as you expected. Okay, then SBI futures price, how much it is showing? 604, right? That 604, okay, would have become 620. That means initially it was 604, 620. That means 1500 into 16 rupees is going to be your profit. It will be added to your account if you close the position. 1500 into 116 is how much? So 24,000 profit. Okay, what you need to do to get the profit? Okay, once you buy the futures, it will be shown in the position. You, if you are happy with that profit, because you are assuming, you are expecting 20, it will increase by 20 rupees, right? It already happened. You close the position, go to position, click on the checkbox and exit. Then your account will be credited with 24,000 more. Okay, take the negative scenario. If it, you paid how much initially? 1,81,000. Okay, assume in the same scenario, there is a different situation. Now, instead of going up 20 rupees, it came down. That means what? Okay, assume 16 rupees. I say SBI futures is at 604 and it fell down 16 rupees. Then it means what? You got 24k loss. Okay, then what happens? Do you know? You paid initially 1,81,000, right? That 24k loss will be taken from this amount. Okay, that is why they take this amount. Okay, whenever you get some loss, they will take this amount from the margin. This is called a margin amount. Okay, that is why whenever you need to, you want to enter any future contract, you have to pay margin amount. Why you need to pay margin amount? If you don't collect the margin amount, say suddenly if it, suddenly if SBA falls 100 rupees, then what happens? 1500 into 100, how much? 1.5 lakh. Okay, what if you don't pay? Okay, you incurred a loss, but there is chance that you are not going to pay. That is why they collect this amount, which is called margin amount. Okay, margin amount, this margin amount is decided by market. Okay, whenever you we add to watch list, they will suggest you how much you need to pay to enter this contract. This is based on the volatility and many other things. Based on this, how much we need to pay as marginal amount will be, margin amount will be shown. This amount we need to pay before entering the future contract. Once you get the loss, they will start deducting this amount. Suppose if you get 24k loss, they will take it will become some 1.5 lakh approximately. Again, if you get another 25, it will become 125. They start on deducting the amount from your margin amount. This margin amount is blocked. Okay, once you enter future position, you can't use this amount for any other purpose until you exit the position. Okay, suppose if again it decreases 20, they will take another 25. So your loss is going to be recovered from this margin amount. Okay, in the, as I told you, if it increases, no problem, they will keep adding your amount. Okay, if you get 25k, your 1.81 lakh plus you will get 25k in your account if you close the position, right? If you get a 50k profit, they will add 50k to your account. So it's simple. Futures means buying stocks, okay, but without paying the full amount. Okay, you don't need to have 9 lakhs in your account. If it increases, remember, here 1 point increase is equal to 1500 profit. Okay, if SBI after you entered futures, if 10 rupees, if it went down 10 rupees, then 15k loss. Remember guys, you have to be very careful. You are playing with 1500. This is called leverage transaction. That means you don't have 9 lakhs, but you are taking advantage of a 1500 quantity with just paying 18 1 lakh 1.8 lakh only. That means this is called leverage transaction. You have to be very cautious, otherwise your account will be zero also, right? What if you after you purchase, there is a very bad news like corona, and what if it crashes? SBI, if it crashes at 200 rupees, that means 1500 into 200, which is 3 lakhs. Okay, so that's why you have to be very careful. But how do they recover? You might get question. I have paid only 1,81,000, but if suddenly it comes down to 3 lakhs, how I'm going to pay? That's why they don't wait until that moment. As soon as you start getting losses, they are deducting, right? Okay, I will show you. Okay. So 1500 is the lot size, right? Say 600. Okay, how much actually, if you want to buy this without futures, you should have 9 lakhs in your account, right? So this is called contractual amount. This is called contractual amount. Okay, and for futures, you don't need to buy 9 lakhs. Say, assume I'm just saying 10%. You have to check in zero the site or somewhere. It will tell you whether you need to pay 10% or 12%. Okay, as the margin amount. This is called margin amount you need to pay. But in margin, there are two components. Okay, there is something called a span margin. Okay, and there is something called exposure margin. Okay, the market guys means SEBI or someone, I don't know exactly who, they will decide you to enter this contract. You need to pay 7% of your contractual amount. So 7% of 9 lakhs, you need to pay span, and 5% of 9 lakhs you need to pay as exposure margin. This both combined, it is called the margin amount you need to pay. Okay, assume I will see how much is 7%. 9 lakhs into 7%. Okay, it is a 63,000. We will calculate 5% also. 9 lakhs into 5%. 45,000. Just for example, I'm saying, so assume these are the percentages dictated by the market. So then to enter this future contract, you need to pay around 1 lakh, right? So span margin is 63,000 and 45,000 is exposure margin. Okay, assume after you entered, um, 10 rupees SBI went down 10 rupees. That means 15k loss, right? They will deduct 15k from 63,000. Okay, again 15k means again 10 rupees down. Assume they will deduct again 15k. That means how much? So you have 33,000. Assume another 20 rupees down. Okay, they will deduct again 30,000. So your span margin, how much it is now? 3,000 only. Okay, assume another 3 rupees down. That means 15,000, right? One point reduced means 1,500 rupees lost to you. If SBI is down with 1 rupee, you will get 1,500 loss. So 3,000 is 4,500. Okay, that means your span margin is almost over. Now what happens, Zerodha is going to send email and SMS saying that this is called margin call. Okay, come on, keep adding money. Okay, you add more money in your account because this is risky for them, right? Suppose what uh, if you wait, suppose if market allows you to trade, and what if it suddenly goes down another 40 rupees, then 60,000 is going to be lost, and if you don't pay it will be problem for zero there, right? And to market also. That's why they don't allow you to continue once your span margin is completed. Okay, once your span margin is over, this is a kind of buffer, still you have this amount. Okay, at this time, once this span amount is over, your loss crossed this span margin, these guys will send you SMS and email saying that add money. Otherwise, what happens if you add money, then no problem because you have span margin to cover the losses. If you don't add the money, mostly they will close the position automatically because you are not paying money. That is a risk for them, right? If you don't add money, they will calculate the net loss and remove the amount from the existing margin and close the position. Okay, so what we discussed so far, contractual amount 1,500 into, this is called lot size. Okay, 1,500 into amount. When you add into watch list, it will show 600 or something, right? If you multiply, this is called contractual amount, say 9 lakhs, right? Whenever you want to enter this futures contracts in equity, if you want to do it, you need to have 9 lakhs in account. But to enter futures contract, you don't need that much amount. If you pay 1,81,000 for SBI, it will allow you. How to check this? It will show you here. Click on buy, it will show the margin amount here. 1 lakh, it contains span margin and exposure margin. Okay, 1,81,000. This is called initial margin. This is called margin amount. As I told you, it contains two components, span margin and exposure margin. Okay, if you are getting profit, suppose after you buy, see how to buy the futures. So when you buy, it means that you are expecting SBI to go up. In the same way, if you sell, That means you are expecting SBI to fall down. That means when you buy the futures, if it increases for each 1 rupee, you will get 1500 profit. If you sell the SBI, if it goes below the current level, for each 1 rupee, you will get 1500 profit. But if it after you sell the SBI future, if it increases, it is loss for you. Remember this. Okay, when you buy future, if it increases, it is happy for you. For each 1 rupee increase, you will get 1500. If you buy the SBI future and if it falls, then for each 1 rupee you will lose 1500. If it comes down below the current level, for each 1 rupee downwards movement, you will lose. Remember, but if you sell this future, if it decreases, for each 1 rupee you will get profit. If it increases, you will get loss. Hope some of you might know the shorting concept. In shorting, whenever you short any stock, if it decreases, you are happy. When you sell the future, it has to reduce, then you will be happy. If it increases, it is trouble for you because it is against your view. Okay, so for each point that goes above the current level, if you sell the SBI, then suppose say 604, assume 604. If you sell this future and if it went to 610, then 1500 into 7 is your loss. Okay, remember this, guys. Hope it is clear. And if you have any questions, ask me in comment section. I will try to clarify. Thank you so much. If you like my video, please subscribe and share with your friends.